Hello, we are Raman, Preetham, and Sudhir. Today we will be talking about the cryptocurrency and Bitcoin markets. To give a little bit of background, we were mainly interested in this project because we wanted to predict price changes in cryptocurrency like Bitcoin and Ethereum. To do this, we plan on creating visualizations that allow us to compare prices for different cryptocurrencies. We also wanted to explore how social media impacts cryptocurrency rates, so we chose to compare tweets with crypto prices. Some of the cryptocurrency research projects currently available have modeled the impact of social media platforms on crypto prices. According to author R.J. Dolan, decision-making is highly impacted by emotions. Similarly, behavioral economists Daniel Kahneman and Amos Tversky stated that decisions, even ones involving financial consequences, are impacted by emotion and not just value alone. It is clearly evident that tools such as sentiment analysis can be used to predict the demand and price for a good in a market. For our project, we primarily used two datasets, the Bitcoin market dataset and the general cryptocurrency dataset. Both datasets included 6 key statistics: opening price, high, low, closing price, and adjusted closing price for each day. We also utilized a Twitter dataset with 17 million tweets, including key hashtags specifically related to Bitcoin and other cryptocurrencies. This existing visualization shows the cryptocurrencies mapped against their coin values from 2015 to 2017. We can see that the crypto rates are growing at relatively slow rates, and social media seems to not have much of an effect on the values. After 2017, however, we will see this trend change.
The presentation talks about how some of the famous crypto have changed over the time interval of 6 years. As we stated earlier, the rate is very stagnant until 2018. Then we see spikes. Bitcoin was doing much better than the other coins, especially from 2020 to 2021, which is because of impact from social media. Now we are going to explore how social media impacts the crypto volumes. If we see the volume of the tweets on cryptocurrencies are in billions. Bitcoin, Ethereum, and Dogecoins are trending in 2020-21, which are higher rates. We'll be looking into various analysis of cryptocurrencies during the time interval of 6 years. Bitcoin, Tether, and Cardano are the most prominent currencies. The slide shows all famous coins and their volume, high, low, close, and adjusted rates. The cryptocurrencies are bought and traded on trading platforms similar to the traditional stocks market platforms. The most notable cryptocurrency is Bitcoin, which is in orange. Market is trending in 2020. Cryptocurrencies are parallelly trading along with stocks. Traditional stock market will be closed on weekends after 4 p.m. But markets for coins are open every day and all the time. Next couple of slides talk about the most dominant coins, Bitcoin, Ethereum, and Litecoin. We can see here that when international markets were open, to trade the cryptocurrencies, the Bitcoin rate went pretty high. But when some countries are banned it, the rates are dropped. Here the visualization shows volume of Bitcoin traded across 5 years. As we know, everyone was working remotely. This caused more activity on Twitter and an increase in news on cryptocurrency. Based on the available data, Bitcoin rate was summarized in between 18K to 25K. The visualization shows the market is open high at 18K and close at 20K based on the market analysis.
So based on our understanding, Bitcoin clearly dominates the market, followed by Ethereum and others. Bitcoin has a major market capitalization over other crypto coins. We will now look into the how Twitter contributed to the prices in cryptocurrencies recently. This can be seen from Twitter's growth and user adoptions, which has been ever increasing since past couple of years. This slide gives an overview of how relationship between the hourly tweet and Bitcoin prices are, and we see that they are pretty much correlated to each other. Here we see the historical price behavior of Bitcoin with respect to bull and bear market, and we see that the prices are usually down within the bear market. This slide gives a distribution of sentiments during both bull and bear markets, and we see that average sentiments during bear market is higher than in bull market, with peak security tradings around 950 in bear markets. Let's talk about how tweet sentiments impacted the price of Bitcoins. We can see from the graph that tweets are correlated with Bitcoin prices. As the number of tweet increases and based on the sentiments of the tweets, Bitcoin prices increases and decreases accordingly. Both the plots of Bitcoin prices and the volume of tweets are moved parallelly, and we see that with the change in volume of tweets causes a change in price of Bitcoin as well. Following two slides show the relationship between tweets and prices. This is another indicator which shows people closely follow tweets and accordingly make decisions on buying and selling of the coins.
Here we have visualization that shows Elon's Twitter stats and volume of retweets. In February 2021, Tesla bought 1.5 billion volume of Bitcoin, and Elon Musk even mentioned that Tesla would accept cryptocurrency as a payment. Generally, we know Elon is so active on Twitter. From the slide, we can see Elon's tweets during the 2020, especially on cryptos. His most retweeted and liked tweets are for Bitcoin and Dogecoins. This slide is similar to above statement announced by Tesla to suspend vehicle purchases during the Bitcoin purchasing using the Bitcoin. Bitcoin rates crashed over the period. This shows how Dogecoin was influenced by the tweets from Elon. Dogecoin was another cryptocurrency that rose to fame. In Feb 2021, when Elon Musk and many other celebrities tweeted about Dogecoin, the value of coin shot up suddenly, and Dogecoin, unlike Bitcoin and Ethereum, has technically no use.
We now know the impacts of Elon Musk's tweets on crypto prices. Here we see that there is a high correlation between different cryptocurrency prices. This slide shows right about the time when tweets were mentioned about Bitcoin not being supported for company transactions and how crypto prices were impacted and started to fall about the same time.
From this graph of the first and second financial quarters of 2021, we can observe that the Bitcoin price rapidly increased in February due to a sharp increase in tweets and social media attention. 3 months later, it came crashing down. As we can see here, Ethereum follows a similar pattern to Bitcoin. Near the end of April 2021, we can observe a rise in Bitcoin and Dogecoin, while a large amount of Ethereum coins were also bought. This led to the sudden rise in prices of Ethereum as well. Looking at Ethereum's moving average value, it appears that its value fell down as rapidly as it had risen. The negative sentiments among social media had caused the Ethereum prices to rapidly decrease, just like other cryptocurrencies. Here we can see the rise and the fall of Dogecoin, which is particularly interesting since there was a lot of buzz surrounding it in late April and early May of 2021. Now, this visualization shows a similar moving average value for the Dogecoin. Through the extensive analysis of our visualizations, we can clearly see what had caused the cryptocurrency crash. Bitcoin is a significant indicator of the crypto market, and it seems that each of the cryptocurrencies are interrelated. The crypto market is overall very volatile, and there are many different factors that can lead into the sell-off. As we have seen, social media, especially Twitter, has a major influence on the price fluctuation of cryptocurrencies. For example, many crypto investors were buying Bitcoin just because Tesla founder Elon Musk claimed it was the next big thing in finance. To conclude, analyses like these can be very useful in predicting potentially volatile cryptocurrency rates in the future. Thank you for listening.